Warriors, good NFP day. How's everyone doing? Hello, Patrick, TGIF as well. Don't use max leverage when you trade the NFP. If you guess right, you'll feel like you're free. If you use max leverage into the NFP. If you guess wrong, your account would be history. Don't use max leverage. Use less leverage. Okay, hey Dan, how are you? Okay, so I'm flat going into this. So let me coach you. So what kind of week have we had in the dollar? Pretty good week. Good week in the dollar. Negative week in the euro. So what kind of reaction would I be looking to fade? I'd prefer to see dollar weakness to fade or euro strength to fade, because I don't believe they'll be able to turn this into a reversal week to the upside. Could happen. Anything, everything could happen. But right now I'm going to go with the 2-week trend, which we have a 2-week reversal. If you guys use the 2-week off number system, closing under this candle's close, 23.53. So we have a weekly reversal, and even though we've come down, I see more people putting out things on TV trading ideas and on here Trading View, more looking for, bounces. So when I look at the 1 hour, I could finally understand it now, because we did make a new low on the 1 hour. As you can see, we didn't confirm. Okay, I still think when you look at the daily that this line right here, if I could extend it out, it's going to come in down there around the shade under 121. I think there's still a possibility of that happening. The reason for that is I still think there's more left in the Dixie to head up towards its 3-dot drive line above 150 or so. So these are some of the targets I'm looking for in Dixie. So if we have a dollar sell-off on the NFP, I don't know what component of the report might do that. It's also possible that we have a number where the dollar just keeps going, and I'll address that next week. So I hope everyone had a decent week. Euro Kiwi was one of the best trades of the week, the short side. Also staying long the yen. We took out last week's highs. Something that I teach people about RSI not just being about divergences. There are things you could do when markets are confirming, momentum is confirming price, and that was effective. So interested in what the team is thinking going into this number. It's a pretty big number. I mean, the S&Ps, the indexes got slammed last night, fighting their way back as Trump doubled up on, proposed tariffs. So this is going to be, I think, a significant day. It almost looks like if we give up last night's low, okay, this was a spike on the news, that this market could be vulnerable, okay? And there really are only 2 drives here. So I don't know what to do here. I think if you're trading indexes, you just have to have an opinion and stick with it and take heat every other day with conviction about your targets, whether it's 2,400 or a move back to new highs, because right now, I don't know. But this would be your first indication there's going to be some pressure. And of course, what was covered all week, I would even write down this number for the VIX, because it's a big line in the sand. and we break out here over this formation over 2580. See, we're up here pre-market, but over 2580, it's going to be a major breakout. Could take you into the upper 30s, maybe 40, who knows. So keep an eye on that. 2050 to 121, yeah, that's what I'm thinking, Dan. Yeah, and you said, I don't know, 3-4 weeks ago that you would love to buy it there. So your wish has come true. Hi, Blake, I hear you. How are you, buddy?
Hey, Dale, the man without a plan.
You ever hear this expression? Man plans and God laughs.
No, I never have.
Okay.
I have.
But I hear a lot of first. But wait,
Huh?
did I hear Stelios?
Yes, I'm
Yeah.
here. I was going to say I have heard it, yes.
Okay.
You are old.
I'm older than you, I think, yeah.
Yeah, by like 2 months, but you're old. Older slightly. So no,
Hold
no,
on, Blake,
you know.
Blake, I'm pouring some Geritol in my coffee.
I tell you what, I always learn something new from Dale every single day. If it's not about the markets, it's definitely about some other stuff. So, you know,
I'm like, I got a million of them, Blake.
yeah, I know you do. You've been around the block just a few times. So, so that's
So we'll
that's
have to
cool.
do another million shows, okay?
Right. So, well, good morning, Stelios. I'm not sure if Steve's here yet, but good morning to him and good morning, Dale. So, you know, we don't have a whole lot of time to talk. I'd like to go ahead and since Dale is not a man with a plan today, I'm going to go ahead and give you my plan of action.
I would sell weakness.
What's that?
Buy dollar weakness today.
Buy dollar weakness. Well, you know that. Okay, so let's start off with the dollar, and I've got, if you're a ForexAnalytix subscriber, you know I've got a dollar index pattern in play because we have broke out of this triangle, and now you know I'm feeling that, you know, as I've been explaining to you guys the last couple of days, I'm not a dollar bull like longer term. I am pretty, you know, I'm looking at the dollar at a pretty big inflection point, and the dollar is, remember, it's been beat up for a year, almost a year and a half. I mean, it's been a year and you know, like 4 months. The dollar's been on pretty much just a complete bloodbath. And we've spent all of this year of 2018 really consolidating, and now we're threatening. You can see this is 2018 basically from where my cursor's at. We've been consolidating. We're drifting back up towards this downtrend line, and my assumption is we're going to take out this downtrend line. I mean, we're going to take it out, squeeze the shorts some, and because it's mostly about euro positioning and, you know, and some risk aversion that I think the dollar is going to benefit, not because the dollar is making a turn based on some sort of macro standpoint. I mean, let me ask Stelios, are you still mic'd up?
I am here, yes.
Okay, so has anything changed from a macro standpoint on the dollar that you can tell?
Absolutely nothing from the past few months. The only thing that's come in is obviously these new trade wars. Are they going to happen? Are they not going to happen? Will they continue, etc.? So my view has always been for weeks and months now that the dollar probably rallies a bit because of positioning, because of a sentiment being one-sided. But the medium-term direction is dollar lower, and I still think that's the case.
I agree with you. I think that if you look at this chart longer term, we're shifting from you know, low to high, left to right, to high to low, left and right. So now, you know, if I had to just draw it out for you guys, do I think the dollar is going to go like this? No, I think the dollar is going to do this. You know, we're going to, and I might be a little exaggerated here. I'm not, you know, I'm not trying to give you any, oh, we're going back to 96 and then we reverse it. I can barely even, you know, I'm trying to figure out what's going to happen 35 minutes from now, not, you know, necessarily 3.5 months from now. So I'm not very good at it either. But you know, I think we're seeing that positioning really play in, and so the dollar's probably going to squeeze a bit, where the euro corrects, and I ultimately want to be long the euro, short the dollar. I just think that there's going to be a lot better prices to be had. So therefore, I've been trading dollar strength really as of the last few weeks, and you know, and I've been chipping away at it, and I'm not playing the dollar yen to the long side. I'm playing the euro dollar to the short side. Okay, so now let's talk about this for a second. So the euro is below this multi-month trend line. You can see how we're slightly below it right now. I'm going to zoom in for you. Here's your daily chart, and it's really starting. I mean, if I was long the euro from, let's go back to, you know, the 1st of January, which is basically right here, right? So you're talking, and I'm going to get rid of this. I'm not going to keep it drawn, but you're talking basically right here, the beginning of the year. You're probably a little nervous, especially if you're poorly positioned. Remember, people came into 2018 extremely bullish the euro. Like the euro's going to 140 bullish, you know, and right now anybody who's positioned long in the euro for this year is probably sweating bullets, and they're sitting in front of their computers. And today is a big day because we are, you know, slightly below this trend line. So in my opinion, I think the risk is still lower. We'd have to have a horrendous number in order for the euro to really reverse. When I say horrendous, I mean, you know, wage data is going to have to go completely the opposite direction, and we're going to have to see, like, you know, us with a negative number. I mean, you know, is that possible? I don't think it's really possible. You know, I think the dollar is going to, I think the number that's going to come out today, even, you know, referencing Donald Trump and his tweets, you know, we're looking for probably a relatively strong number. And so if we get a strong number, you know, is the euro going to continue lower? I think that's going to maybe give the green light for some of your, you know, some position squaring. Some of the, you know, traders that are poorly positioned in the euro are probably going to start, you know, bailing, I would think. Now, are we, and can we, you know, come all the way down to 121 today? I don't know if that's necessarily possible to get down to 121 today, but I think that's where we're going. And I think this is going to be a pretty big test of the euro dollar in the coming weeks, is how we respond at 121, because that's where I think a lot of the longer term longs are going to be. The ones that are positioned in the teens, those are where they're going to have the protective stops, I think, are below 121. You know, I would, if I own the euro at 115 average, 117 average, 118 average, below 121, I'm bailing on the majority of my core position. Let me turn down my mic or my speakers a little bit. This is the office. They're chatting away. So anyway, hold on, I didn't connect back over. Okay, so anyway, I'm looking at the euro dollar. As long as we stay below this like 122.80, 122.70 level, I think this is where, you know, on a weak number and the euro pushes up a little bit, you know, let's say we come in line, which I would say if we come in line, you might get some dollar weakness initially, okay? Because I think a lot of people are expecting a much bigger beat. But again, if you know, hourly earnings, which our survey looks at for hourly earnings, is coming in at 3.4%. You know, if that comes in, you know, decent, then we might have a situation where you know, the euro might see a bounce, and then you can sell right into that bounce. The flip side is, let's talk about the dollar yen. So the dollar yen is, this is I have to say, this is the one where I'm really hoping we get a spectacular number. I really hope we see the number come in at like 270, 300,000, some ridiculously good number that spikes the dollar yen up to 108. The reason why I say that is because technically the 108, just so you guys know, is the major breakdown point from this huge multi-year triangle. So I'd love to be short the dollar yen at 108. Let's not forget, that there is a trade war. I don't care what the president says that it's not a trade war. We already lost the trade war. It's no, we are, you know, we are literally going head to head with China right now. So, and obviously the headlines last night about, you know, the mulling over of another $100 billion in tariffs. I mean, or $100 billion in goods on tariffs, whatever the headline was. Then you guys can correct me if you want. Anyway, I think that's going to loom on the markets from a risk on risk off standpoint. So if the market continues to trade heavy, which I believe it will. I mean, look, the Dow didn't sell off. I mean, we're down 222 points right now in the Dow futures. We were down almost, you know, we were down 400 maybe, 400 and change after the spike, after that news. This is not going away. This trade war that we're in, this escalation of these tensions are not going away. So any spike up to 108, I'm going to see it as an opportunity. Also, if we have an opportunity short, that is. Also, if we do get a move to 108 because of a strong number, you have to realize that the Fed is going to tighten, and we have Fed Chair Powell, who is going to be speaking shortly after the numbers, you know, like I think like an hour after the numbers come out, or, you know, a little bit later this morning. You know, he's probably going to be relatively hawkish, and I'll tell you what, you know, a more hawkish Fed, I don't know how the market's going to necessarily take that. You got, you know, trade tensions that are building, and then you have tightening of monetary policy, and that's going to constrict the economy even further. So you got these tensions, which could probably continue to increase inflation. Consumer spending is going to, you know, already start to weaken in the coming, you know, months ahead. Then you have tighter monetary policy, where, you know, money is just more expensive to borrow. That's a recipe for more risk aversion. So, you know, the trade, right, when you have, yes.
Sorry to interrupt. Just wanted to say one thing, that the tightening that the Fed has done already and continues to do, the effect is not instant. You know, it takes months for the effect to come into the economy to actually manifest itself. So it's going to be something like a double whammy.
Yeah, absolutely. And to mention about, you know, like you know, these tensions are escalating with China, and these tariffs are starting to be imposed, or will be imposed. That is going to, that may not be hitting the consumer right now, but when, you know, prices of consumer goods start to go up in the next 6 to 8 to 12 to 12 months to year and a half, we're going to feel it. We may not feel it right at this very moment, but we're going to feel it. And you know, and especially if things go awry with NAFTA. I mean, here in the U.S., we could have, you know, inflation from you know, automobiles, food, you know, immigration issues might, you know, cause costs of, you know, a lot of agricultural goods to go up here in the U.S. I mean, this is stuff that you start looking, you know, 6 months, 12 months in advance, and, you know, it could get a little ugly. But that's why I look at the dollar yen. It's like, okay, the here and now is I want to be a seller at 108, because I think that whatever's coming down the pipe into the next 6 to 8 months is going to be ugly, which is going to, you know, keep this dollar yen. If I have to give you a kind of a look of what I'm thinking here, of something that looks like this over the course of the next, you know, several months, you know, whether we hit 100 yen or maybe even lower. So I want to be positioned in a short dollar yen. That's why I'm hoping that today gives me a really strong number that I can sell into. So I'm hoping that we get you know, and I can move this a little bit. I'm hoping we get a move up to 108 or something like that. Now, two other things I want to talk about before I pass it over to you guys is that the euro yen. This is one of those pairs that you know, I think the euro's going down. I think the dollar yen's going down. So where do you think I think the euro yen's going? Down, right? And remember that we're still trading below the 200-day moving average, which should cap the euro yen.
Only two drives, Blake. So we would get a new low at your trend line
on a third drive. This would be a third
Yeah.
drive, right? If we do go, and I think the euro yen's a perfect setup for a short. Yeah, and as long as we stay below, like let's say 132.15, you know, where my cursor's at, somewhere up here, I'm willing to be on the short side of this. And so I'm hoping that, you know, we get a great number, stocks spike higher, dollar yen spikes higher, euro yen spikes higher a little bit, and then, you know, I can sell into that strength. So for me, this is going to be, and I may be totally off base here. Maybe the number comes in completely weak. Stock market futures fall through the roof, and the euro yen just goes straight down from here. We don't know what's going to happen today. I'm just telling you what my plan is. You know, my plan is to sell strength here. You know, my plan is dollar yen, sell strength in the dollar yen. We get a weak number. The euro dollar spikes up. I'm going to try to sell some strength in the euro dollar. Those are just things that I'm looking to do. Now, one thing that you guys might be asking me or might be wondering is, you know, hey, Blake, how about the dollar Canadian? You know, what do we do with this? And I'll tell you, I had a pattern in play in the dollar CAD yesterday, and I'm looking at this longer term head and shoulder pattern. I think is still valid, but I took it off yesterday when we were down in the 50s, and the reason why is because I'm seeing dollar strength come in a lot of different places. You got the euro dollar coming down, you got the pound dollar.
Giving people too much time, Blake, to short a head and shoulders breakdown.
Yeah, and well, there's a few big issues there. I mean, you got the pound going down, you've got the Aussie can't get out of its own way. The Kiwi dollar posted a false breakout here. You got the Swissy that's ripping higher. I can't figure that one out for the life of me, but it is. You got the Nordic currencies that, you know, look weak. You got the U.S. dollar Mexican peso that's hit the 127% extension. It's coming right back to previous support. So the dollar Canadian, to me, I was thinking last night, hey, you know, and what Dale just said, it's taken too long to follow through, and then we have all this dollar strength coming through, and then if the market gets risk off, the emerging market currencies and commodity currencies may come under pressure. This dollar Canadian could very easily be trading back at 130. So I took it off because I see so many dollars, you know, strength setups coming through that it's not worth the risk. I mean, you can, of course, we could get a weak number today and a strong Canadian data, and I'll tell you, in recent years, it's been really tough to fade Canada's numbers. I mean, Canada's, you know, put up some spectacular numbers over the last several years, and you know, I found it extremely frustrating trying to fade Canada. But maybe they have a strong number, we have a weak number, and the dollar Canadian just, you know, cracks through this floor and really kickstarts this head and shoulder pattern again. But I'll tell you, if we break through the 127, you know, 30, then next week I'll start really focusing back on this on the short side. But for right now, I think for me it was easier just to be sidelined rather than to be involved with so much data hitting the wires here, you know, in the next few minutes. So that's how I feel about the dollar CAD. Now there's, you know, obviously there's a lot more to talk about, and I'm going to be passing it over to Steve and Stelios here in a few moments to take you through non-farm payroll. I just wanted to give you some of the ideas that I'm thinking about. And one of the other things, and I know Steve wants to talk about this, so I'm going to let him talk about it in more depth and detail. You guys got to watch silver and gold. Silver and gold, oops, that's copper. Oops, sorry. Here's silver, very much range bound. Gold, very much range bound. But we might challenge the upper or lower end of these ranges today, which to me gives me a much better indication of what I should be doing, because if gold breaks higher, that's usually an indication of dollar weakness, or silver in that sense. And if gold breaks lower, then that usually means that dollar strength is coming through. So I will be looking at gold and silver today, looking for confirmation. So if they move one direction, I'll make sure that, you know, I'm trading the dollar in the opposite direction, basically, or at least have that confirmation, you know, to make me feel better about being in those particular trades. So those are my setups. That's what I'm looking at today. I hope all that made sense to you guys. And with that being said, I'm going to pass it over to my colleagues. Steve, it looks like you popped in. Good morning.
Hey, Blake. Hello.
Hey, how you doing? Good.
I'm good, mate. I'm good.
So roads still treating you okay? When are you coming back to Athens?
Never. No, I'm kidding. Tuesday, very early in the morning, European hours.
Awesome. Well, you know, I don't think Athens is a bad place to be, but I mean, being on the island of Rhodes is probably just spectacular, and I can't wait to, at some point, visit it. So I'm glad that
make that point. You know, as long as we're young enough to walk it through, right?
Young enough to take my shirt off at the beach. Yes, I'm going to try to make it that way. Good deal. And you got Stelios here. Good morning, Stelios.
Don't forget, Blake, if you're on an island in Greece, you're going to have to be wearing Speedos. So
no, that's not true. I am that.
It's
that
the law, Blake.
I'm
the law.
I'm the goofy American that wears the long board shorts there. So
it's the law.
No, I've done it plenty of times. People just look at me funny, and they don't all wear Speedos. Come on, I mean, now you're generalizing. Stelios wears Speedos, but you know.
Yeah, right. But for the record, I'm not on a Greek island.
Yep.
Don't you, Steve? You wear Speedos, right? When you swim?
Nope. Completely naked. I'm kidding.
Hey guys, this conversation.
Analysis.
This conversation is going way south. All right, you guys got to focus back in.
Good luck.
All right, guys. Hey, thanks everybody. Have a great one. Good luck today, and I'll see you next week. Have a great weekend. All right, sounds good.
Kick some ass, Blake. Kick some ass.
Thanks, guys.
All right, Steve. Hurry up and speedo up your analysis before the NFP.
Actually, you know something, pre-NFPs, I don't have much to say. I think that, as always, Blake gave a great overview of his outlook on potential outcomes, post NFP and how we should watch for various reactions. Let me say here that the market is expecting still, if I remember right, 193 K jobs in the US and unemployment falling to 4%, right?
That is correct. If I may add, I think
don't see your screen.
I don't either. But okay, if I may add, Steve brings up the screen.
Can you please pass the screen to me, because probably Blake forgot to do so, or I never got the message now.
Hold on, I'll do it. Change presenter.
Okay.
I was going to say, if I may add, there you go. If I may add, the big event today. Okay, we know, unless there's a huge surprise in payrolls, we know that payrolls are going to be good or good-ish. So I think the main event today is Powell. We shouldn't really lose focus from that, unless, like Blake said,
I agree with you. Unless we have a huge surprise, I think that the market is going to be more focused on forward guidance from Powell. They probably want to see if there's something that has changed following, the recent rhetoric we've had, all with the trade wars and Trump statements and China. So yeah, NFPs are important, but I think that since he's also fresh on the job, Powell's statements are going to be particularly a topic of focus for market participants. So it wouldn't really surprise me if we're not to see immediate follow-through. Now, having to do with Canadian data, Stelio, I think we're expecting something like 18,000 jobs
18,000
created.
jobs, yeah. We have also
5.8% unemployment.
Yes. We have IVPMI as well, which is also a very big number. So, and also let's not forget, we've got average hourly earnings out of the US, which has become very important too. So those things.
Stelio, help me out with the data, since I don't have multiple screens here, and I have open here, as you see, both the USD CAD on my screen and USD yen, because they're both going to be telling of the reaction we have from the market, along with S&P, Euro USD, the cable. So it has, it's a few seconds.
Oh, 103K. So that's weaker than expected.
Dollar weakness. Yeah, much weaker than expected.
Revision slightly higher. Canadian numbers were good. 32.3K.
Yeah, so that's why we're seeing, as you see, USD CAD already at the lows of the day, already a shooting star. So far, testing the 50 DMA as we speak. Definitely the US data were weak. The Canadian data, as you say, were strong. USD yen initially weakened quite a lot, but it seems to have pared back its losses. So let's see. You know, we need to wait for a few seconds, sometimes a couple of minutes, for the market to stabilize and market participants to decide how they're going to take the news. Cable is bid. We can see that on the top right corner. Euro is bid as well.
The other interesting item is that unemployment ticked up, actually didn't tick down to 4%, but participation rate
Which means
down.
participation rate, okay.
They went the same way. So, you know, so participation rate ticked down, which means that it should push unemployment rate lower, theoretically, but it didn't. Just something to note. But anyway, It's only like 0.1 here, 0.1 there. It's not a huge deal. It could be rounding, you know.
Yeah, that's very true. Plus, keep in mind that anyhow, unemployment is already extremely low. So the unemployment number is not the one to pay attention to. More or less, it is participation and jobs created. You know, despite seeing quite a weaker number than expected, we have to say that the trend remains extremely strong, right? I mean, plus you have to take into account that many times we see the first number being quite far away from the final revised number. So I don't think that, you know, a single print below expectations should rattle the market too much, because unemployment does not seem to be, you know, the focus anyhow. I mean, everybody accepts that you know, unemployment is already at record lows in the US, and you know, that's not the main topic. So I don't think, you know, seeing weaker NFPs is going to be you know, that much detrimental to the market. I think the market is now going to wait for Powell. As we see, you know, the market has already dismissed that, because USD yen, after an initial reaction lower, is almost unchanged on the day now, near the highs at 107.30. The next area of resistance is the 108. We said that yesterday as well, that the areas of resistance here are 108 and 109. One of them is the 38.2 of the last leg lower. The other one is the 50%, but also coincides, it confluences with the broken triangles, long-term triangles, support which might act as a resistance. Perhaps this level will act as a magnet. So perhaps we will first have to rebound to that before moving lower. We still see that this divergence between the USD yen and the US stocks is still holding. I mean, USD yen, you know, reacted very little to the plans we had after hours yesterday, when we had new statements, you know, about tariffs and so on and so forth. Okay, USD CAD has also more or less stabilized near the lows, but not at the lows of the day. I think that 128 should act as a resistance from this point on. We've also seen the short-term chart. If you see it on a 4-hour chart, you can see this can be viewed as a head and shoulders formation. Regardless, though, 128 was and is an area of support resistance, even if you go back on the chart. So it's a horizontal area of support resistance. Falling below it, I think, and we said, you know, I had a short here. I had closed it, and as I said several days ago, I re-established that short when I saw that actually, you know, USD CAD does not actually want to rebound from there, and it was simply consolidating. So I still have half a position. To be exact, I again have a position since the beginning of the week. So you know, I'm happy to be here. I don't think that unless we see a close above 128, we have any reason to be worried about it. On the other hand, I have to say that I'm not very convinced that this is the beginning of a new leg down for the downtrend. I mean, it wouldn't surprise me if we see another rebound from some lower, since we now broke below 128. The area we'll be looking for as support is anywhere between 126.20 and 126.50. The 200 DMA is there. we had some support resistance incidents in the recent past. So I think we can easily find ourselves there, and depends on what happens from there and the way with which we're moving lower. Is it impulsive? Is it corrective? Does it have momentum? Does it lack momentum? Is going to tell us if actually this high that we found at 131 was a tradable high, or it was a short-term high. So we're going to see. In general, if you remember, I kept saying that I do want to see the USD CAD moving to new lows. I've shown the weekly chart several times, and it's a good idea to revisit it once again, so you can understand why I believe that this is a corrective move that we've been seeing since September 2017, simply because you can see that it consists of two legs, or if you want to say three legs, or so you want to see it as an ABC and a B, C, D, depends on which point of view you want to take it, doesn't really matter. It does look like a correct move to me. We never made it to the descending trend line resistance we had from the previous two highs. So I think that, later on we can be pushing lower towards even towards the 115, 116 area, 114 perhaps. That's the 61.8 of the big uptrend until the high that we found in the very end of 2015, beginning of 2016. So bottom line, I would like to see USD CAD much lower. I'm still not 100% that that's going to happen from exactly here. Okay. Regardless, I already have half a position, and I'm going to see how it's moving and take decisions later on. Now, having to do with the euro and the cable, because I know that people keep asking, nothing has changed for me. They both remain in corrective consolidations. I have no reason to be looking lower. I mean, a lot lower. I have no reasons to believe that they found tradable high. Sorry. I believe that the chances are for a big higher from here, and the more we fail to break down, the higher the chances that we're simply correcting in time than in price before moving to the upside. Same deal applies to the cable. In my opinion, as long as the cable remains above 138, even if we push lower from here towards the 138 area, I will be looking for another push to the upside. Actually, yesterday and today we're finding support at the 50 daily moving average. We might even move higher from here. That's a possibility. In this case, the recent corrective move will be a pennant. I mean, I can even draw it from, as we speak. So if we find a low here, which isn't impossible, that was simply a pennant, which is a very frequent corrective formation. Here it is. So we might even move higher from here, but even if we fall towards this ascending trend line at 138, 138.30, I would still be looking for cable to find its footing sooner rather than later. Now, if we go to the DXY, I know that we've had some dollar strength coming through, but as you can see here, I know that my charts will be lagging a little bit because the connection here is not the best.
It's only a few seconds today, Steve. It's not as bad as the last time, but still.
Okay, great. Okay. So even if you see at the DXY, you can clearly see here that we have no reason to be really bullish, given the fact that after we found a low at the confluence of supports, we were looking actually for a low. We've only had the index correct in time, very little in price. We had one test of the 91 area, which we had indicated as a very important resistance, and we got rejected from there. And we're currently in the middle of what can be either a triangle or a bear flag. In the specific case, I've drawn it as a bear flag, but probably it's a bear flag. So bottom line, we have this descending trend line that you see here in red, which comes, if I zoom out, you're going to see that it connects through previous highs, and this is currently somewhere at 91.80, 91.70. As long as we remain below there, I really have no reason to believe that this is something more than a consolidation before another push to the downside. So I remain of the belief that the dollar has higher chances of resuming lower than actually rebounding from here. So any strength, I think it's a great opportunity to be selling. And given the fact that the euro and the cable in combination are something like, I don't know, 70, 75% of the index, you can understand that, what I'm telling you having to do with the Euro USD and the Pound USD, also gets proven from a look at the DXY index. I mean, there is a very good chance that those are also consolidating before a move to the upside. Now, we've had a lot of discussions, and Gregor was here last Friday, and he gave his input as well, considering that it's a high likelihood that the next push to the downside to new lows might be terminal for some time for the dollar, meaning that perhaps the next push that we see to the downside is going to be the final one before at least seeing a much stronger correction to the upside, which makes sense. I mean, sentiment is very much one-sided in the dollar. Everybody's is looking for new lows. The dollar index hasn't had any serious rebound since the very first days of 2017. So at some point, it's bound to, create, a violent reaction to the market, to the upside, squeeze out weak shorts before resuming to the downside. But, that's just looking one step forward. If we want to stay to now, I have to say that in the short term, I do remain bearish the dollar, even if it rebounds somewhat from here. Okay, so what's 91 as first resistance, from 91.70, 91.80 as a second? Only break above there, I think, can get us, reconsidering. Until then, I don't think we have anything to think about. I think the technical situation is quite clear. Okay, now having to do with stocks, I'm not going to say much about stocks because yesterday I covered it very well, in the sense that I said, even a few days ago, we said that, listen, if the bulls manage to reclaim the 200 EMA before closing below it, that's going to be, a huge step forward, and that's going to keep alive the more of the two scenarios that we have, the more bullish of the two scenarios that we were considering, which is a prolonged consolidation before a resumption to the upside, which makes sense because we still are in a multi-year bull trend, and we shouldn't forget that, right? So fact remains as it is, unless we close below the 200 EMA once again, and we even had a blog post about it in the end of last week, how important that is. Keep looking higher, or anyhow, keep looking for stocks to remain in a range until we finally manage to break higher. Okay, a break below the 200 EMA. Now I'm going to be speaking only about the SPX, and equivalently, you can have a look at the rest of the indexes. I think it's going to lead to either 2480 or 2400 before we can consider a recovery from there. As you see, Nasdaq quite clear as well. The 200 EMA acted perfectly as support. Dow Jones, same deal once again. This is actually a different formation. It is a triangle, but it's a flat bottom triangle, perhaps, for which we're approaching resistance at the moment. So watch Dow Jones here, actually a little bit higher from here, but anyhow, we're getting close to that. This is the Nikkei, has been a little bit choppy.
A flat bottom is a descending triangle. Flat bottoms on a triangle going down as a descending triangle. It's a reversal formation.
This is a horizontal bottom, actually, right, as you see.
I mean, yeah. So descending triangle. I'm just trying to help you.
Okay. Yeah.
Not a flat bottom.
So. Yeah. Good point. So, watch it closely.
unless we break below 23,200 and whatever it is, 70, Dow Jones is holding up quite nicely. You know, and a fast look for the DAX rebounded, you know, from an area of important support, but this blue trend line has acted as a resistance before. I think unless we break above it, roughly, let's call it 12,500, you know, you should be careful because we don't have a confirmed bottom in place. Okay, so that's with stocks. Bottom line, we need to remain a little bit more patient. More choppy trade might lie ahead before pushing to new highs, unless we see them break down from the equivalent levels we talked about. Now, I don't think much else has moved since yesterday that we had this one more overview of the markets. Let me have a look at crude, because crude is one instrument that has been producing movement lately. Okay, listen. Let me delete this triangle. It's redundant. The fact that crude, you know, broke below this horizontal area of support resistance, it's roughly at 63.80, and got rejected from it once again, and the fact that it's trading quite heavily tells me that whatever this move is to the downside is not over yet. I'm going to say once again that as long as we remain above this channel's resistance, broken channel's resistance, which has acted several times as support, there is a good chance that this is one more corrective move to the downside. But if we do see momentum picking up, because we've had some strong days to the downside, you know, the chances that this was a double top will be increasing. So, you know, what's 61? Because this trend line currently comes roughly at 61. As long as we remain above it, you know, you can cautiously be bullish. If we break below it, I think, yeah?
Yes.
Really? Oh, Greg, is that you?
Yes. How are you?
Welcome to the party.
Can you hear me well?
Yeah, do you well?
Yes, we can hear
you hear us?
Something is lagging, but okay.
Okay, Grega, since we're talking about crude, I have a question for you. Is this another correction in your opinion, or have we seen a double top?
I think that this consolidation will be longer in time than I thought on the first place. So I think that there will be some limited trading range between 59 and 67 in the zone, maybe
okay,
even a
so that's what I want to say. So let me guess. Then, in your view, this whole consolidation then that started from what was it, the end of January, is likely a big triangle itself. So it's a single corrective move on its own, right?
Yes, exactly.
Okay, got it. Which means that you're still looking for one more high.
Yes, into a fifth wave. Also, I
eventually.
Yeah. Also, just a second to take a look at the charts. I think that there's also a big head and shoulders target there, around 70 on a line chart from a weekly line chart.
Let me pass the screen. Let me pass the screen to you. Stelio, can you do that for me, please?
Yes, I'll do it right now. Hold on a second. Change.
Thank you. Give the screen to Greg so we can see what you see.
Done.
Okay, so you can see screen. Can you see charts?
Yes, we can. By the way, I want to say hi, Paul. Sorry, they dared me to do it.
Okay, so everything is fine? Steve, are you still there?
Stelio, everything okay with his?
Yes,
yeah,
I can see the chart.
Yeah,
Everything.
Hi,
Everything good?
Gregor. We have
Okay,
we have everything there, buddy. Go ahead.
okay. I can't see it yet, but you know, I have a slow connection here, so I'm sure they're going to come through.
Oh, okay. What I'm looking here is head and shoulder formation. We have seen a nice break to the upside at the end of 2017. So actually, first and minimum projection for this head and shoulders pattern is actually around $70 per barrel. But actually, true correct approach for these targets is at 80. If you take the distance from head to the neckline and project it from a breakout point, is actually higher. So this at 70 is my minimum upside target, which means that there is room definitely for at least another leg to the upside. Also, if we take a look on the lower time frame charts, this is the old chart. Just a second to find my new updated charts, which I hope I have them here. Probably not. I have them on the different computer, but what I'm looking at is that this is actually a triangle. Okay, I can make this very quick. So actually, I will select this. I'm looking for this to be wave A, wave B, C, D, and wave E, and then I will be looking for a move to the upside into wave 5. So I think that there will be a limited trading range, and the next leg that I would be looking at is probably more weakness lower into this wave C. Okay.
Gregor, is there any possibility that the B is an irregular and we get a C to take out the A low before it goes?
Yes, of course, definitely. Especially because this first leg, very good observation, Dale. Actually, the fact is that this first leg was made by 5 waves. Okay, it was small overlap here, but it's still allowed to be overlapped if we consider that this can be a leading diagonal. Okay, so leading diagonal can occur in wave A or can occur also in wave 1. So in either case, we can expect, yes, a 5-wave decline to make this wave C as a flat formation, as you said. So
thank you, buddy.
In both cases, yes, I think that, but from a trading perspective, it's very interesting because we cleared some very important levels up there, okay, from start of this year, and then turned in 5 waves. Okay, so if someone see this as a potential top, okay, and maybe have a very aggressive bearish count, then downside potential is very big. But I have bullish count actually because I'm looking for a correction and still have room for lower levels. Okay, so from a trading perspective, we have different views, but both views suggest the same direction. In the near term, I think there can be opportunity. So in such case, maybe I would be looking for resistance next week around 64.50. Let me take a look at fib levels here.
Watching live on the fly Elliott analysis by the winner of the FX Freed Award for best analyst in the universe.
In the universe, yes. Okay, so here's this 100% projection, okay, of first leg. Let's assume that we are here mid wave A, now we are in wave B and waiting for wave C of B. So there is a resistance at 64.90. It's also coming in line perfectly with 61.8% of this whole decline. Okay, so watch out next week for this level right there. Okay, and as I said, either maybe we get only wave C to the downside, maybe we get wave 3 low, wave 3 down there back as part of a big wave C, as part of a flat correction, as you said, Dale, back towards this February 2018 lows. So actually, I think that there is room in both cases for what? $4 drop or so. So I think this is pretty interesting. Steve, are you still there?
I'm absolutely here, mate.
Do you see charts? Do we have any questions?
Absolutely. No, I have no questions. in your crude analysis. I wanted, you know, since a lot of people are confused with what indices are doing at the moment, I would be more interested before we go on to FX to see what you think that SPX is doing at the moment, since we didn't satisfy, you know, the need for one new low. Do you think we're in a triangle?
Actually, I see current recovery as a 5-wave move up from the start of April. Okay, so these were some kind of a early month flows, which I think will be retraced. So in my opinion, we are making here a flat formation. I'm just concerned if this is really wave 2, then you know the downside projection for wave 3 of C is much lower, because more complex this current correction will become. Okay, from this wave 1 level up into wave 2, then more brutal can be the line, because as you know, if wave 2 is much bigger, then wave 3 can be much more extended. Okay,
correct.
So I'm a little bit concerned about bears, because I still think that we should go below these wave A levels from February. Okay, and if this is going to happen with wave 3, then you really know that there is potential for much bigger drop than we firstly thought. But again, what I'm looking at for the near term is to hit and spike above 2680 resistance and then turn to the downside. Also, even if this would be some kind of a bullish interpretation, you would still be expecting a reversal once we hit this level to 680. So maybe even today, after the US cash opens, I would be looking for a potential fake break or push to the upside and then turn lower. Okay, and ideally, if this will occur, if we will get a risk off moves, then what I would be looking at are some yen crosses. Here I have pound yen, which is from Elliott wave perspective is just a beauty. Okay, it's
not only, mate. I was showing it yesterday because, you know, people were asking, and I was saying that, listen, no matter how you view it, the pound yen is definitely within a channeled correction in the short term, which is bound to fail. I really believe that the pound yen's recovery is the most obvious thing to fail out there at the moment. At least from a technical perspective, it's beautiful, as you said.
Yes, and actually what happened is that previously we had from 2016 also, there was first push to the upside, then consolidation, and then another leg to the upside. And what was really the most important was this broken trend line. And this broken trend line confirmed the fact that bulls are done and that we are headed probably to the downside. Also notice that this reversal occurred at this area of a wave 4, which is very typical. Also, not only that we have seen a reversal, but we have seen a reversal lower after this ending diagonal formation. Okay, so we have plenty of price structures that indicates that we are going to see lower levels. But the most important is that drop can be counted in 5 waves. And when it comes to, maybe some would say that this is not a 5-wave movement, it's just not an extended wave 3, but so that this would be maybe a corrective move. It's okay, but you have to compare current rise to the previous decline. Previous decline was much more sharp. Yes.
Yeah, and this is slow, choppy, and overlapping.
Yes, exactly. So in that case, okay, I think that there is a chance that we'll see a reversal to the downside. Also, if we take a look a little bit closer, I think I have a chart here, one over here. You can see that actually this first leg was quite strong, okay, from the low of a 5th wave. But now in the third part of this recovery, okay, we are going even slower, but still to the upside. Okay, so clearly there is no bullish momentum, and I think that once momentum comes in and volume picks up, actually this could cause a very strong move into the opposite direction, not to the upside, but rather to the downside. Okay, and also we are here at the resistance of a previous wave 4, and 61 as well as 50% fib levels are very important. So I'm looking for spike above this resistance, and next week definitely pound yen in line with the S&P 500 wave count that I showed you, I think that there is a chance that this will be moving to the downside. Also, I love to compare this elliott wave analysis with head and shoulders pattern. If we take a look here, if I clear this, you can clearly see that this can be a left shoulder, head, and our right shoulder unfolding. Okay, so I think that there is neckline, and you know that if we go below this neckline, downside potential is very big actually. Okay, so technically speaking, I think that pound yen could see much more lower levels while we trade below 2018 highs. Okay,
so let me guess you're also looking for the USD yen to fail at some point below 109 as well, right?
Dollar yen, what I'm looking at is, as I said, on pound yen, we could see a little bit more upside, right? Where is this one? Our chart, here it is. A little bit more upside to spike above this high. Swing high, it was a resistance of a wave 4. On S&P 500, I said, I have a different computer anyway.
Perhaps a little bit higher, you said, for S&P 500 before reversing lower. So I'm guessing the same thing for USD yen.
Yes, and in dollar yen, what I'm looking at, I don't know if we are in a wave 3 or wave C, but the idea is that once we will have 5-wave move up from 105.66, we should expect a reversal at least in 3 waves. Yes, yeah, at least and once this pullback occurs, okay, as you know, dollar yen may not be so strong to the downside, while other yen crosses can be. And if stocks will decline at the same time, I think that so when we complete this 5th wave here around 108, I think that there should be an interesting timing for potentially a reversal to the downside and even short opportunities, as I said, on pound yen. Okay, so
bottom line, the whole game here is going to be, once you see the pullback, if the second move lower is going to be actually a C, or if it's going to be something impulsive, which you can call a 3, in which case you will be looking for new lows than the recent, lower than the recent lows we had in the USD yen, correct?
Yes. So actually, but for the short term, to me, the most important is then once dollar yen, which is quite strong, will complete the 5-wave movement to the upside, I think that's when pound yen could be very interesting for shorts. Because if dollar yen will start turning to the downside, pound yen, I think, may fall very aggressively.
Dale, do we have more time, or you have an interview?
We have an interview. Vladimir Rybakov.
Is your guest already here?
He's got a pretty good following. He is here, yes.
Okay. Okay. Stop screen sharing.
Okay, Greg, regardless, thank you very much.
Nice
as always, your view is always great.
Thank you.
Thank you, Greg. That was great.
Steve loves you. Steve loves you a lot, Greg.
That's very true. That's very true.
He almost idolizes you. Can you send him an 8x10 glossy? And just one thing before I start with Vlad, and I'm really looking forward to this interview. Steve did send us a picture of him on vacation. So here's Steve here. If you guys can see it. Steve having a great time in a Speedo on road. Okay, and he works out very hard, and just when he's not on his charts, he's at the gym. And Steve looking great for a 4-year-old guy, So now I'm going to go to Vladimir, who
enjoy the interview. Have a great weekend.
Yeah, I don't think Vladimir would look as good as you in a Speedo, even though I haven't seen him. I'm just guessing. But Vladimir Rybakov, welcome to Face. I'm passing you the controls. Looking forward to hearing your voice, seeing your screen.
Hi there.
So you have that drop in. Hey, Vlad, how are you, buddy?
I am wonderful. What about yourself?
Good. It's what's it been, about 5 years
I wish I could
since
look
our last interview?
Sorry?
Has it been about 5 years since our last interview?
Well, believe it or not, yeah.
Yeah, time flies when you're having fun, Vlad. I do want to get to your trading methodology and some of your views that you have on different instruments, but I'd like to start with, what was it that motivated you to leave your home country where your family is and everyone else, Russia being in the news? I know you left probably a few years ago. Why did you leave Russia?
Well, I was a little kid, to be honest, when it happened, and it was mainly because of the nuclear disaster we had in Chernobyl.
Oh, okay.
So we were living pretty much close to this area in Belarus, and you know, my parents didn't want to take the risks, so we moved on. And as a little kid, no one asked me what I want, right? So I had to follow.
Okay. So your parents, so when you were a little guy, you left Russia. Where did you go initially?
We were from Belarus originally. Then we were in Israel. And
Okay.
after Israel, I moved with my wife and my kids to Canada. So currently, I'm talking to you from Canada, not far from Toronto, a beautiful city called Stouffville.
Okay. Well, welcome to North America, my trading warrior brother.
Thank you very much.
I hope it's good for you. I hope it's good for you and your children, growing up in a nice, peaceful type of situation. Toronto's a sister city to Chicago, so I have an idea of what it's like. And why don't we talk about a little bit about the instruments and what you look for. And, you know, I did a little preparation for this interview because I met with a mutual friend of ours, Giuseppe Bazil. And I know you do short-term work, but what I found fascinating is that Giuseppe told me that you do most of your trading personally off weekly charts. Is that an accurate statement?
It really is.
Okay. Well, you know, you would be the first person, and I've interviewed almost 1,000 that makes, you know, people look at weeklies, but you know, they trade, they drill down, they may have an idea in the background of a weekly trend, but I've never met anyone who trades strictly off of weekly. So I thought that would be a great presentation. I know you're showing a daily, so this is probably pretty micro to you, but why don't you tell us why don't you trade with a telescope, not a microscope. So why don't you tell us what you're seeing here on the Aussie Kiwi here?
Well, no problem. Well, first of all, yeah, it's actually, I'm very honored to be the first one talking about dailies and weeklies. I know most of traders simply observe these time frames just to, as you said, to have a background idea what's going on, where the wind blows. But during these years, actually, you know, it's funny. I grew from 1 minute time frame, 5 minute time frame, and I finished the whole system around the weekly and the daily time frames combinations. Maybe that's because I'm getting older. I don't know. Maybe because.
Yeah, you know, the day trading scalping game, you know, for floor traders in the old days, and now, you know, scalpers off the internet now, is kind of a young man's game. But you know, Jack Schwager said, I said, what's the most important advice you could give a trader? And he said, find a trading style that suits your personality. So you had to go through all the different time frames to find something that lined up with, you know, how you wanted to live your life without staring at the screen all day and looking for important developments in the market. So let me guess, you trade a whole lot less than you used to.
Yes, much less. Well, the whole idea for me now, I trade less, I invest more. I'm proudly saying, you know, that all the short-term trading is done by my trading team. That's my personal students that are trading now together with me, supervising them. but
right.
they are the ones operating on the intraday.
For all your action junkies in your community.
Yes.
Okay. All right.
And,
So daily Aussie Kiwi. I kind of like it down here.
well, I love that.
Go ahead.
Opportunity for few reasons. If you allow me to start from the monthly, and I hope you're not going to finish the interview because of that.
Please put up your decade chart where you only get a candle every decade. I'm interested in the monthly. Go ahead.
I really was interested to see what was there in 1920, but no one gave me the chance. So what I see currently, and it's enough to make an observation. We are here on the top of the levels. We are here on the bottom. We can curse this situation as a range, right? All that situation. Now I believe for the long terms in what I call the middle. I believe that everything in life always tends to go to our middle place, our balance place. Especially after being for a while out of the balance zone, balance place. So if we take the high and the low, the middle is somewhere here, roughly.
So a lot of people would call this mean. A lot of people would call this mean reversion. Is that what you're talking about? It comes back to a mean where it was just somewhere in the middle.
Yeah.
You get extreme.
As I said, you can name it as you want. The idea is the same. There is the middle, there is the center, there is the balance zone that was there for every single instrument out there. And later or sooner, the nature of the money, the nature of everything in this life is to go to this balance place, the same place where it feels the most comfortable with, especially if it was for a while out there. Now, the beauty of the Aussie Kiwi is, if we take a look on the times, how long it was out of the balance. Let's say this is the balance place, right? The middle, okay? Doesn't matter how we name it. These times that it was out of the balance zone are pretty much the same. They are, if we observe, it looks the same every single time. And now,
time-wise, they're pretty much the same.
Yes. Well, I'm sorry if my English is somewhere lacking behind.
No, we get it.
So I'll try my best. I promise. I'll try my best. I'm improving.
Fine.
In Canada, we are improving here.
Okay.
So that's the idea. And now it's pretty much long time below this middle point, which makes sense without talking technically. Makes sense for the pair to try and make a reversal later or soon. Now this is a monthly chart. It might sound like a ridiculous thing. Who cares what's going to happen in 2020, right? But it is good enough to remember what kind of wind we will be exposed to on the coming future. And that's most likely, there are no guarantees in this market, right? But it's most likely going to be bullish wind. So from this place, I take it lower. And the lower, believe it or not, will be the weekly. And that's what we have here. We're still facing a very low now observation of a range. On the very bottom of the monthly, we have another range, which is the weekly. Besides all that saying, we have two beautiful trend lines meeting points. This is the first one, this is the second one. And this becomes a very serious pressure zone for the pair to start and develop some kind of bullish return. And for me, that's exactly the place where I love to start looking for my investments. My positions are normally positions that are going for a few months and not few days. Simply, as you mentioned before, because that's enough. I don't need to do more because it's enough for me to leave this style and trade this style. It does exactly the results I want. So dropping down to the daily chart, here comes the art I love to apply, and this called the cycles, the simple money flow of specific instruments, given instruments. In that case, that's the Aussie Kiwi. We can see that the pair was moving in two beautiful waves. Now, there are plenty of ways to call them A, B, C, D, 1, 2, 3, 4. alpha, beta, gamma, delta, call it whatever you want, right? The idea is the same. That's how the price is developing. And what I like mostly about it, if we take any of these two, this is one, this is two, of the blue lines, and we break it lower, we can figure out that the first blue line was built by 3 little pushes, and the same happening with the current situation.
Right.
So each of these things is.
So it's like a fractal. It's like a fractal of itself.
I beg your pardon?
Kind of like a fractal, where you know what you see in one part of the market, you see repeated. Yeah,
yes.
Nice. Okay.
And that's what's happening. This is basic. That's a great format of a real money flow, because when the patterns are built the same way, are going pretty much in the same time, same period, developed in the same idea, in the same pattern, in the same combinations of waves, we got a clear read that there is enough money involved in this pair, and we got a hint for the bullish reversal by the bullish divergence. That is.
Yeah, I was going to get there with you because I know that's one of your tools. So, do you wait for entries for divergences on RSI or MACD? Which of the three that you have on the screen do you give the heaviest weighting to? And also, do you need more than one divergence to have more conviction, or is one enough?
That's a very good question. So the first answer would be I love the MACD. I know many traders prefer the RSI because it's on the very current moment with the relative strength of the instrument. For me, the MACD is the best representative of the volume, something we cannot measure for real in Forex. But the MACD for me does it on the best way due to the distances of the moving averages. So MACD for me is the main part, with the moving averages of it is the most powerful. The histogram is also a wonderful confirmation, and when they come together, that's a very good say from the market, like, okay, something is happening.
I'm going to try it, Vlad, because you know I'm a big RSI guy, renamed it to the Real Simple Implicator, but I'm going to start looking at the MACD. Thank you for sharing that.
Yeah, with a big pleasure. You even may fall in love with that.
Yeah, I've fallen in love more than once in my life.
RSI also hints, by the way, the same idea. Something is happening. RSI has hard time to break lower this zone that it has. Sorry for my drawings. That's not my strongest part. But the RSI also suffers to create lower places. So that's what makes me believe that something is happening. For the second question you asked, do I require more than one divergence? Yes. And that mostly it comes together with the MACDs. It's good enough for me if I have divergences on 2 time frames, but if I don't, I love to see it on the second indicator. This for me, number 2, the RSI. Stochastic I don't use unless I'm talking about hidden divergence, and then I'm looking for some kind of confirmation, but that's basically all. So that's the story here with this pair. I believe this is the zone, the 105 down to, and I know it sounds big, but again, it's important to remind that I'm talking about bigger ranges here, not the intraday trading, not the short-term trading. I believe this is going to be the reversal zone, and it could start any moment. It was false breaking here, hinting that the bulls are taking over. It is false breaking here with the divergence, so it could start on any of the days.
Any day now.
Yeah, it could start now. It could start.
Or there could be one more washout for a third drive, maybe. You know what I'm interested in is when you trade, and do you scale in, knowing that the area could, you know, maybe you have some on here, and if we go to a lower level and there's still divergence, you might add on. It actually builds the case and gives you a chance to build a position with a series of entries. And also the key question is, when you're trading with wide ranges like this and you're going to give the market a lot of room to breathe, what kind of leverage do you recommend people use?
All right, so for the first question, yes, I love to build up my positions on the go. So I start from a specific level, which I'll explain in a minute, and I love to add if it goes with me or if it goes without me. For me, there is an emergency exit. I don't use stop losses as fixed price for investment. I have an exit plan. What should happen if I get out? And the emergency for me is the maximum risk I can allow myself. According to that, I decide how this position will go. So if I throw my Fibonacci's expansion levels to identify the cycles, this is the first zone, which makes it critical, zone of 106. This is the second critical zone, which is also the bottom of the weekly range. These two levels are very, very powerful levels. This is the first place where I am involved. This would be the second place where I will be involved. And my emergency exit plan is if we get out of the weekly range and the divergence is basically broken, vanished, gone. In that place, I'll have to accept a loss and get out of the position with the maximum risk I allowed myself. That's the whole idea for me. Because of this nature of trading and investment, I don't use leverages. I don't believe in leverages. I think it's one of these tools that, well, unless it's controlled and on a minimal place for intraday trading, it can be risky for the beginners mainly because it's like it's borrowing money. When you borrow a lot of money, suddenly you don't know what to do with that. You allow yourself to go a bit nuts, and when you go a bit nuts, you suddenly find yourself in the places that you don't know how to control yourself. And the same idea with the leverage. So especially for the beginning, those who start their trading career, I think leverage is a very, very, very risky place. And if you use it, it has to be on a very minimal level.
Okay, great point. So you're trading unleveraged. And you know what? One of our great traders on our team is like that, Stelios Kantos. So yeah, and he has wide stops, and you could sleep at night when you're unleveraged, can't you? Even though you're putting on size. And you need a large account to do it to make it worthwhile, don't you?
True.
Okay.
You can do it with small accounts. It's
right. It would be like having a savings account. But okay, so a real nice look on Aussie Kiwi. I guess the big question now for a lot of us FX guys, Vlad, would be, is this bounce in the dollar in the context of a bear market rally, or is something more significant developing in the dollar here with LIBOR going up, and because banks don't want to lend to each other because there might be dollar scarcity, and or is this going to be a great buying opportunity in euro, say around the 121, 120 level? What's your view on your macro with dollar and euro? They're the same, so you could choose one or the other.
you prefer to go back to the euros? No problem.
Okay, all right.
Let's do that.
Okay.
The euro is one of these pairs that you simply don't have a clear view on, and every day every new day you find yourself scratching your head even more and more and more because saying, what the heck is going on with this one?
That's why I asked you. So you don't know either.
Well, I'll tell you my view. Well, I'll make it simple. No one knows. Okay.
Okay, there you go. No one ever. You could have a view supported by evidence, whatever method you use. But even if you have a method, at times you don't know.
That's the whole game of probabilities here. There is no warranty. There is no guarantee. But whatever you see is right. You are talking here about the game of statistics. You take your chance. You take your risk with proven evidences. And the entire idea here of this game, what you risk versus what you can profit if you are right. That's all. That's the game. And if you keep the positive balance in terms of what you reward more than you risk, then you have nothing to worry about, especially when we talk about the long terms.
Okay, what's your minimum R to R, Vlad?
Well, for me, it's minimum 1 to 2, 1 to 2, and most of the times 1 to 3.
Okay. So all you need is you know, a little better than a 50% hit rate to be successful.
Anything above 40%, I'm happy.
Okay. All right. So
and believe it or not, that's enough to make a great successful trading. Which, you know, it sounds impossible, but when you do the simple mathematics, you understand it's there. So for the euro dollar, the whole idea, the way I see that is, maybe you remember, maybe not, and that's fine. When I was preparing my 2017 annual forecast, everyone said I'm crazy because everyone saw that the euro dollar is going to 9.
Parity or lower, yeah.
And I was one of these crazy Russian guys to scream buy around 105. Okay. Of course, everyone said I'm just a kid, have no idea what's going to happen and why. But my analysis was exactly the same. I saw here a beautiful pattern of the monthly chart, which is huge time frame.
Okay, so let me guess. Now we're in the balance zone.
Beautiful, exactly, and that's why. And this is exactly why no one can know what's going to happen. You nailed it. It's exactly what it is. We are right on the middle.
Okay.
From here,
yeah,
everything is possible.
And that was probably your target down there. You were looking for it to revert to the balance level.
125
okay.
To be specific.
Okay, beautiful. Vlad, go ahead.
From the long term, that's exactly what happens. That's exactly why the euro dollar currently behaves the way it does, and that means going crazy, going ranging, doing nothing, right?
Right.
That's exactly why it's on a balance zone. There are not enough buyers, there are not enough sellers, there is not enough interest around the balance zone, and this is exactly why it behaves like that. The European, with their own actions in the central bank, of course, right? What they wanted to do is to bring the euro to this normalization zone. This zone seems to be good enough for the Americans as well. This zone seems to be good enough for British as well, etc., etc. That's why the euro is on this area and it's holding. Looking on in terms of, let's go shorter a bit to the weekly. We have here two critical places. The first one is the zone of 125, 126, which gives this cycle. That's a beautiful double cycle confirmation. The idea here also was that the first cycle was built up with small push and a bigger push, and same with the second leg, small push, big push. So the way it forms give a great hint that this is a critical zone. We are talking about the 125, 126. Is that critical zone for the sellers to start to sell from? Maybe. It is definitely a great zone for the buyers to cash out, at least as for now, before they decide what's next. So the way I see that at this moment, we do have the level. It's around the 125, 126, which means it can dance around it for a while, and it will still be relevant. It will still act like a massive resistance and can still dance around it for many weeks. And
it's like a magnet.
Yes, exactly. But as long as it holds and as long as the divergence keeps its pressure, there is a good chance that we are still for the sell. And if that happens, the target for something like that has to be around the zone of 38 to retracement of this Fibonacci, which means in rough numbers around the 118 or slightly lower.
Okay.
Now, for that to happen, the euro must break this range. If it doesn't, it's a very simple hint from the market that the bears are simply not ready. And if it will refuse to break that and continue to hold, there is a very good chance we are going for the next level. And the next level.
More high. You'll have glaring divergences at that new high, Vlad, on almost every indicator you have. RSI won't confirm, I don't believe. I know it's predictive, but I don't think it'll get back to almost that 80 level we were at the high. We actually already had one divergence at the other high. So this could actually be the second divergence if we rally to new highs on the RSI.
It could, exactly. It could go and make it one more push to the range and crash.
Yeah.
It can, but the thing is here, it has to do one of the two things. One, break.
Right.
And hold. Otherwise, there is no bearish evidence. And as hard as it's, it's very hard to believe, but we don't have any low that is holding currently. There was one fake breakout here, and that's all.
Yeah.
So to look currently for long-term sales doesn't make sense.
Yeah.
And that's the whole thing here. So
wait, do you remember the rocker Tom Petty?
Yeah.
The waiting is the hardest part.
It is.
Okay, so we'll be waiting, and and you know what, Vlad? I'm not going to wait another 5 years for us to do this again. And I want to thank you so much for. It was great to hear your analysis, and
thank you very much
from you today, and you edified the community. Why don't you take this opportunity to perhaps show your website? You could follow Vlad at Vladimir Rybakov on Twitter, and maybe you want to show your website now.
So first of all, thank you very much for inviting me. It's always a pleasure to talk to you, and I hope I was useful to the people that are listening and gave some different look at what I call trading, right? What we call trading, and as you mentioned, you have
mission accomplished. Mission accomplished, Vlad. Okay.
So this is my blog, Vladimir Rybakov. That's the main website. This is where I update everything on every day, daily basis. My views, my ideas. We have a chat here. Of course, we have a lot of contents here inside. My performance of my trading, not only the whole team. This is where we got our systems running, all of them. And this is the live performance when you can simply go and click on every place and find the entry and the exit we take. When, believe it or we do a lot of job for that to make that happen.
Yeah. A lot of work.
A lot of work. Yeah.
But, I noticed you have cryptocurrency up there. Have you personally traded any crypto?
Oh yeah, definitely.
You like trading crypto?
Definitely. Nowadays a bit less because the volatility is much lower.
Right.
But definitely I love it. I think I belong to this community that think that this is the future, and the fact is that so many big companies and governments are looking into that just to create their own alternatives. Tells the whole story. It will take time. It might go ugly. It might be not so nice. But I believe these belong to the next generation of trading.
Wow. Okay.
So I'm one of those believers. And there is my the VIP club, the Traders Academy Club. This is the website, the Traders Academy Club. This is the members area. That's how it looks from inside. This is where I'm doing 2 live trading rooms on daily basis from Monday to Friday. And that's all. That's where I am. I'm on Skype, Vladimir.Rybakov from Canada. There are few names, the same name, so Vladimir.Rybakov, and it's saying it's from Canada. That's how you can contact me if you have any question or anything you would like to ask or just say. So support@VladimirRybakov.com, and that's all.
Thank you, Vlad. I hope pips continue to rain down on you. Thanks for bringing your telescope for our interview today with Aussie Kiwi, and going over Euro with us and talking about your methods. Appreciate you edifying our community. Thank you, my trading warrior brother. Good hunting to you and everyone you teach.
Happy weekend to everyone.
Thank you, Vlad.
Thank you very much.
That's it, Faith. The wrap for the week. Hope you had a good week. Weekends are a great time to do your homework, plan ahead for next week. Lots of ideas from our guests. Lots of great ideas from the team. Remember, most of all, don't just count your pips, count your blessings. And being able to do this and collaborate with you guys every day and have great guests like Vladimir Rybakov is a blessing to me. So have a great weekend, and we'll see you on Monday. Thank you, Vlad.